In today's video, we're going to be talking about the Pi Cycle Top Indicator, better understanding what's going on with Bitcoin's price action, and talking about this through the lens of all the tendencies that we talked about in the past, specifically the ones where we see Bitcoin reject from the green moving average or form reaccumulation regions just below it. Let's talk about that as we have now broken to new all-time highs for Bitcoin. Let's talk about that in more detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So we spoke about this in the past few days and also the past few weeks that Bitcoin tends to reject from this green moving average. We've seen and talked about the historical tendencies. We were talking about this not really being a possibility given that this rejection took place in the pre-halving year. We were talking about this being kind of the most likely scenario if we were to see a deeper rejection, but this rejection wouldn't be as deep as 40%. We were talking about up to 20% and in a shorter time frame than 45 days. And we spoke about this being really on the lower probability side of things because such a deep rejection within such a short period of time, that's very reminiscent to the 2012 cycle, which was over 10 years ago. Very different cycle we're having right now. So this is what we were really talking about, up to 20% and not in a long time as 45 days. And what really happened was we did reject from here. We were speaking about this rejection and we did get one, and we were talking about this being a shallow rejection of up to 20%, and we got 14%. And what was really surprising though was that this dip got bought up so aggressively and we recovered in a mere amount of days. So like we were talking about, being up to 20%, but being in a shorter time period, but it turned out that it was going to be a mixture of both cycles here, this cycle and this cycle, of course up to 20% dip, but it took a few days just like we saw in the cycle from 12 years ago. So a mixture of both cycles. Nonetheless, we have broken out to new all-time highs. We've broken beyond this green moving average, and in fact it is very reminiscent to this scenario that we spoke about being a reaccumulation range here, because we were talking about a potential deep rejection. But if that rejection wasn't going to be very deep, then it could turn out to be a reaccumulation range below this green moving average. And it looks like this is going to be, and is the case already, where we're breaking beyond this green moving average already after that 14% dip. So if we're considering this sort of overextension now, maybe this is what lies ahead. But at the same time, we have to consider the pre-halving retrace, which could be occurring in the next 2 weeks or so if history repeats. And history hasn't been too kind to us because it hasn't been repeating as in prior cycles. So something to really take into account. But what if we see, and this is another scenario we might have to take into account, but I think it's also unlikely, is that we upside deviate beyond this green moving average and then reject a little bit, like we saw here, for instance, upside deviation and then rejection. And also here, I don't think that's going to happen here. However, we could, if we see a dip from here, we could retest this green moving average as a potential support, and a retest then, a successful one, would confirm further price rallying towards the upside. So that's a scenario to potentially keep in mind as we progress in what is a new all-time high day for Bitcoin, and we'll probably see more new all-time high days as we progress throughout the cycle, because if this is any indication, then we see new all-time highs really for multiple weeks at a time, in fact. So we are currently breaking beyond this final major resistance area, and we've done that with relative ease. Of course, we did form this reaccumulation range here. We did get that 14% pullback, but this, even many people were talking about, well, Rekt, you got this one right, but this isn't the pre-halving retrace as many might have thought it was going to be. I was merely talking about this potentially being a point of rejection. It did turn out to be the case, but this was never going to be the pre-halving retrace because we spoke about this that the pre-halving retrace should be occurring in the next 2 weeks or so. So if it were to be a pre-halving retrace now, it would have been 3 weeks at that time ahead of schedule, whereas there is still scope for a pre-halving retrace. However, that retrace might take a shorter time, and it might also be in the form of a dip, given how we are already in price discovery territory beyond new all-time highs. So at this point, we have to try and think about where could we see a potential crossover for this pi cycle moving average. And of course, we're talking about both of these, the 350-day moving average multiplied by 2 and the 111-day moving average multiplied by, well, nothing actually. It's just a 111-day moving average, whereas this one's the 350 moving average multiplied by 2. So given how we've just been rallying for multiple weeks at a time, no real dips, of course, some shallow ones, and this is the best we can really hope for. And if we talk about dips, 18% in January, 14% only a few days ago, that's the best we can really hope for. But these dips haven't really impacted the trajectory of these moving averages. Even we've just seen inflection points in this more sensitive one, because this is a moving average that takes into account less days in its moving average. So it's going to be more sensitive to price and flicking up quicker than this one, for instance. And we've seen flicking up in this one. So if we were to propagate these moving averages, that gets us around to a bull market peak. According to the pi cycle moving averages, in late June, maybe early July of 2024. But of course, we are going to be seeing pullbacks on the way to new highs, and this is going to be impacting this bull market peaking zone according to the pi cycle moving averages. And if you look into my video that I posted very, very recently on how to think about these bull market peaks, check that one out, because it does take into account an accelerated cycle. However, these bull market moving averages in the form of the pi cycle top indicator that comprise the pi cycle top indicator, they assume a bull market peak is going to happen even earlier than that, and it's probably not going to be as early as June or July 2024, probably later in the year of 2024. So check out that video, because we're probably going to still see lots of fluctuation on the way to the parabolic rally, and those fluctuations could even be something like this in a pre-halving retrace, maybe shallower, maybe over a shorter time period. But generally speaking, this green moving average needs to and will probably be a support in the future. So 2017 showed us how this green moving average can act as a support, and even in 2013 we saw that this green moving average can act as a support once broken beyond as well. So while it acts as a resistance initially, it then acts as a support later on in the cycle. You can see here pre-halving year, rejection, and then reaccumulation here, overextension. So we never really retested this green moving average, but still it was always going to be that point of reloading on the dip potentially. This was the closest we got in 2021. But nonetheless, it's a moving average that could be a support, and it could be a support even as soon as the next few days if we do see a dip. But generally speaking, once we break to new all-time highs, we tend to see acceleration towards the upside. However, still important not to forget about potential dips in this market. And even if we look at 2014, the 2015 period, when we break beyond those old all-time highs, we break beyond the green moving average and then turn it into a new support, and then successfully rebound, turn it into support again, and then overextend beyond it once again. So if we look at all these old all-time highs, even in 2013, those highs get broken beyond and then retested. You can see that breaking beyond this moving average, then retesting it as a support, supports that uptrend. So this green moving average, really important as a reference point for price when it comes to that final resistance area. But now that we've broken beyond this final resistance area, maybe it will come in handy as a potential support in the future. And that's something to keep into account as we progress in this bull market. But at the same time, still worth noting that these two moving averages will cross over at some point. I don't think it's going to be as early as June or July of 2024, because corrections are going to kick this can down the road, so to speak. Maybe it will be later this year, as I spoke about in the previous video. But generally speaking, this green moving average is probably going to act as a support going forward, and really important to watch out for these two moving averages crossing over in the future. Not too short term and near in the future, as this is suggesting, probably a little bit later, but still the pi cycle top indicator is one worth really taking into account. Not only as a bearish crossover indicator denoting the end of the bull market, but as a trend defining indicator where we can use these moving averages to just potentially buy the dip on or dollar cost average on should we get a support retest here in the future as well. Subscribe to the channel for more videos like this in the future. Thank you so much for watching. Like this video if you enjoy videos like these going forward. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.